So before we move on, again, I want to wish everybody the happiest of holidays. And let's just move right on to what we're going to do. Forgive me while I continue to change my applications here. I think I'm starting to get a little better at this, and I'd like to start our PowerPoint. Let me just move this out of the way. Let's make sure I have my little pen ready to go in my ink color, and we're off. Again, this is the December 6th version of the Rancho Santa Fe Market Talk, and this is Mike Taylor with the Michael Taylor Group, Prudential California Realty. Let's go to the number of sales that we've had so far this year. What we see right here is that we have closed through the end of November 196 transactions, and that compares to the 215 transactions that we closed last year. It looks like with our 41 transactions in escrow right now, that if we can catch about 20 closings out of that 41, we'll end up with roughly 215 or 216 sales. I don't know that all of those are going to close. Several of the 41 transactions, I think about 13 of them, are actually short sales, and of course those take quite a bit longer to close than do the traditional sales. Our inventory levels have dropped down to 255 total homes on the market, and that compares to 272 last month. So we're starting to see a drop in the inventory levels. Part of that is that folks have just been taking a rest in terms of marketing their homes. The other rest that's taking place is just through the holidays. Interestingly enough, because of the way the ratios work, that the number of months of inventory has dropped down to 14 when we compare the current active markets to the 215 transactions that occurred last year. That leaves us with about 1.19 years worth of inventory. But again, what I want to do is kind of look at it by price point really quickly. You can see that under $1 million, we're looking at about 0.42 years worth of supply of inventory. Under $2 million, it's all the way down to 0.54. And as soon as we get over $2 million here, as you can see that we've got a significant amount of inventory and a number of years of inventory. Interestingly enough, that between 3 and 4 million, there tends to be less inventory than in terms of the number of years, and there is between 4 and 5 million. And between 5 and 6 million, there's even less because there's only 13 homes on the market, and we had 9 sales in that price point last year, and only 4 have closed escrow so far this year, but we do have 2 in escrow now. Another really interesting way to view this is let's look at the under $3 and over $3 million sales in all of Rancho Santa Fe. This year, out of 196 sales, 161 of those transactions have closed under $3 million, and 35 of those transactions have closed over $3 million. That ratio is 5 to 1. Now, in the ideal world, our listing ratio would be 5 to 1 also. That would be a totally balanced market. But here, we don't have that. We actually have 128 properties listed under $3 million, and we have 127 properties listed over $3 million. So the ratio is 5 to 1 on sales. The ratio for listings, unfortunately, is almost, in fact, is 1 to 1. And unfortunately, Economics 101 tells us that that will continue to put downward pressure on pricing on everything that is over $3 million. Now, the truth of the matter is that as larger more expensive properties start to come down in price, it will also have the effect of lowering the prices on those things that are under $3 million. The good news is that we still have a lot of buyers. I mean, unlike 2009, where you can see right here, where we only had 148 closings for the entire year, last year we jumped up. This year we're going to be about the same. So let's move on and let's take a little bit more detailed look and a specific look at the covenant here in Rancho Santa Fe. Through the end of November, we had 67 transactions that had closed, and that actually compares quite favorably to the 70 transactions that we had closed all of last year. We do have 13 homes in escrow right now, and so if half of those close, we'll have roughly 73 sales in the covenant this year compared to 70 last year. And again, that's better than and more than we had in 09 and in 08, and is just about equal to what we were experiencing in 07, which was really the beginning of the adjustment in our market. Again, if we look by price point, anything under $1 million, and this includes some very small things in the covenant. It also includes some homes that are in the Morgan Run, Whispering Palms area, has a very low inventory level compared to the number of transactions. When we get to the $1 to $2 million mark, we're under a year's worth of inventory there. We have 22 homes listed, and we have 27 home sales last year. And this year we've had more home sales in this category than before at 32. Where we start to see a drop-off, and this is really kind of important, we're starting to see a little bit of a drop-off in the over $5 million category. And here we had 6 transactions last year where we've only had 3 between $5 and $6 million this year, but we do have 2 in escrow. Last year, between $6 and $7 million, we had 2 closings. This year we've had 1. Last year we had 1 between 7 and 8, and this year we have 1 as well. If we look at the total number of closings that were over $4 million last year, which are all of these closings right here, that's 12, 14, 15, 16 total closings that we had last year. That compares to this year to where we've had 8, 9, 10. So we've had 10 closings through the first 11 months of this year. We're more than likely to get maybe another 1, and if we're really lucky, a number 2 by the end of this month. So our sales over the $4 million mark is actually going to be down about 25% in terms of the number of transactions. And again, what that shows is a couple of things. One is that there's fewer people willing to spend over $4 million. And number 2 is that it also is a tremendously reliable indicator that there will be continued downward pressure on pricing. A stabilized market is defined as a market that has about a 4 to 6 month supply of inventory. Right now in the covenant, we've got 12, 7 out of 12. So we've got roughly 19 months worth of inventory as an aggregate. And by price points, here again, it gets even more than that. Unfortunately, again, the only economic conclusion is that we will continue to have downward pressure on pricing until these supply-demand ratio numbers come in balance. Now, a lot of things impact supply and a lot of things impact demand. But if we look at those ratios, we're going to be able to tell when our market's stabilized and what's going to happen with pricing, at least going forward in the immediate to near immediate future. Let's take a quick look at Fairbanks Ranch. Here again is a very popular community. We've had 27 transactions closed so far this year through November 30th. That compares to our big number of 43, which was a huge number last year. is getting very close to basically what the community's experienced since 2007. We do have 6 properties on the market. If half of those close, that will give us 30. So that will be the second most number of sales and tied for the second most number of sales we've had since 2007. Again, I think it's a nice steady flow of transactions. I think we are seeing that the pricing under $2 million and the inventory levels under that $2 million category are quite down significantly compared to what we experienced last year. Our $2 to $3 million sales is about the same. Our $3 to $4 million sales, it looks like we're going to end the year a little bit less than we did last year. And of course, this year in Fairbanks, we've had no sales and nothing's in escrow over that $4 million mark. Again, if we take a look at the over-under $3 million category, we've had about a 3-to-1 ratio in Fairbanks Ranch, 3 sales under $3 million to 1 over $3 million. Our listed inventory is actually higher over $3 million than it is under $3 million. And what that shows you again is that we still are having downward pressure on pricing. The other thing that's kind of interesting is that it looks like we're going to have fewer sales over that $3 million mark than we had last year, and about the same number of sales we had in 2009. And if we go to over $3 million, we have to go all the way back to 2003 and 2002, where the community in both those years had only 7 sales over that $3 million threshold. So again, it looks like we're a little bit over inventoried in the over $3 million price point. Unfortunately, Economics 101 shows us that there's going to be continued downward pressure on pricing there as well. If we take a quick trip over to the bridges, in the bridges, as most of us know, have 3 distinct home types. We have the villas, which this year we've had 5 closings so far, and that compares, and that's the most that we've had of the villas since 2007, and certainly more than we had last year. We also have 5 of them on the market. You can tell from the price points, however, in the number of closings that again, prices are coming down, and we've gotten more sales than we've had the last, since 2006 under the $2 million category. The Cortials this year so far have closed 2 units. Both of those units have been in the $2.5 to $3 million price point. We have 3 units on the market that are Cortials today. One of them is priced between $2 and $2.5 million. The other one is priced between $2.5 and $3 million. And then we go down to the custom homes, and this is where that we've really had very little absorption this year. We've only had 4 sales of custom homes in the bridges, and right now we only have 1 of those custom homes that are actually in escrow. And we have 14 sales or homes that are on the market. If we go back and look at the number of custom homes that have sold over the years, and we can look at all the way back to 2002, where we had 8, 5, 5, 12, 13, 12. In 2008 it dropped down to 9. 2009 it almost fell through the bottom of the market at 3. It gained some steam last year, and we had 7. And this year we'll probably end up with 4 or 5 only. So it'll be the lowest number of transactions that we've had, the second lowest number. It matches 203 and 204, and is slightly above the numbers that occurred in 2009, which was really the bottom of the market in terms of number of transactions. This report I happen to share. I do this every quarter. It's the same report I presented last time. But what this does is this takes all the communities that all of us compete in the greater Rancho Santa Fe area, and it talks about which companies are doing the business. And what you see here is I'm very proud that Prudential has represented over 26.5% of the sellers through September 30th of this year in all of these communities. They've represented 25% of the buyers. You have Willis Allen here at 16.4 and 8.98 of the buyers. You have Coldwell Banker at almost 16% of the sellers and 14.5% of the buyers. And various states, our local boutique real estate company, family owned, has done 7% of the sellers and 3.5% of the buyers. And then it just falls off dramatically. The thing that we can't ignore is this big category called all others, and this is the onesies and twosies, most of which do not have a presence in our community, but they do have friends who live here and they represent people that are here. And so what this does is it shows who's doing the business, and in some cases who's not doing the business when we think people are doing the business. This Case-Shiller report actually shows our beloved city of San Diego that the median prices have actually gone up a little bit, and even though they're down about 6% for the year on the aggregate, on the median price basis, the last couple of months, starting in May, we've actually seen some of the prices go up. Now, it's very tricky on the median prices because what you do is you take the total number of sales, you basically draw a line right in the middle of that number, and whatever that price is, that becomes the median price. And so as the number of transactions goes up, and if they were all at the lower end, the median price would actually come down. As the number of transactions goes down, and as the number of transactions in the lower end go down, the median price actually comes up. So it's a positive sign, but unfortunately, but the fact is that we've had fewer lower end sales this year than we had last year, and we had fewer lower end sales the last 3 or 4 months than we had the first 5 months or 6 months. And so that tends to push those median prices up by virtue of just how they're calculated. This is something that I wanted to share because this sort of puts kind of things in perspective, at least historically. You know, they say the peak of the market was somewhere in these years right here, which was 206, 207, or somewhere right in the middle of that. And here are the number of MLS reported sales in each of these years. As you can see, and it compares to what it was going all the way back to 2002. And what we're seeing is that we're seeing a trend this year of homes that are sales that are actually going to be less, and in one community's case more, than it has been in previous years. Actually, 2 communities it's more, 3. And so if we look at Rancho Santa Fe, and this is through the 15th of October, but through the 15th of October we had 172 sales that occurred through October 15th of 2010. We have 176 that occurred through October 15th of 2011. So it's tracking a little bit better, but it has slowed down as we just saw. The community that's actually come back quite strongly in terms of number of transactions has been Del Mar, because last year Del Mar hit its lowest point of sales at only 112, and through October 15th of this year, they were already at 173. My prediction is that we're going to get really close to that 200 unit sale number for the community of Del Mar. And we have to reach all the way back to 2005 in Del Mar to hit that level. So Del Mar has had a nice rebound in terms of the number of transactions this year. We have Carmel Valley, you know, and interestingly enough, Carmel Valley's year of the greatest number of sales was 2003 at 1,167. and last year they had 671. And through October 15th of this year, it's down to 510. Now, we did have, through the same period in 2010, we had 544. So we're actually tracking a little bit behind. Encinitas, again, is tracking just slightly behind compared to what it did last year at the same period of time. I don't expect it to be very much different than it was in 2010. Carlsbad has actually had a nice little jump compared to last year, but quite a ways away from where they were in 2010 total. Solana Beach, again, is down about 15–18%, and they are down 119 through October 15th. Compared to 142. Here you have Poway, which has had a little jump. Here you have Rancho Bernardo, which is down a little bit. La Jolla is almost identical. They're within 3 sales of what they were last year. And Coronado has picked up just a little bit as well. So it looks like in terms of number of transactions that we hit our low point, as you can see in these numbers, combined in 2008. Since 2008, it's gone up a little bit. My guess is that we're going to end up with 2010 fewer than we had last year, and probably somewhere in between these two numbers right here. So that's going to be, that kind of highlights each of our high-end communities that we all think about. I'm back, I think, hopefully. I wonder where my, hold on just a second here. Whoops, where did I go? Here I am. Okay, I'm back. Sorry about that. And again, it seems like I'm always trying to get this thing, perfect my skills with it. I actually should, I should show my, I should practice this a lot more. I think if I can conclude one thing from everything that we've looked at, is that we still clearly have made the adjustment and are making the adjustment back from the peak of our market, which historically will go down as the largest and the most dramatic real estate bubble that we will have seen in our lifetime. And a lot of people ask me every day, Mike, when's the market coming back? And the most honest answer that I can give you is that the market has come back. What we've done is we've come back to our fundamental levels, levels that, but for a perfect storm of a variety of factors, never would have gotten as high as it did. We are back to a much more fundamental level than we were, especially leading up into the 2007, 2006 peak. And unfortunately, what that means is that all of us have to readjust our thought process and readjust how we are going to actually approach this market. The thing that I really am optimistic about is that we will make the adjustments that we need to. We will end up with a very stabilized real estate market, and one that I doubt will have the same bubble effect that we've had in the past, but still be a good, reliable market that we can all buy and sell into with some confidence. I want to thank you again. This is Mike Taylor. If you want, sorry, I scratched my nose. I shouldn't do it. If you want to talk to me or have any questions, or if I can help you in any way at all, please give me a call. My number is 858-756-5120, or you can email me at mike@michaeltaylorgroup.com. Thank you for attending. I appreciate it, and I look forward, as always, to our next webinar. Have a great evening and have a great holiday season. Bye-bye now.